Hi, this is Zach Meir with the Bulletin Board Heroes. It is Wednesday, the 15th of March, ready for lots of tax rises today. On the FTSE 100, we've got a rising trend channel, widened now to incorporate the low that we had to start the week, 75.03, and ideally we basically just test the floor of that channel and then head higher. The problem is that with today's and yesterday's peak, 76.40, looks as though this is a bear flag continuation, which will then head back down to the 200-day moving average. But we do have a chance that will bounce off the floor of that channel. End of day close now above 76.40 required to get us up to the old support there that we had back in January around 77.20. But as to be said, at the moment it looks as though we are struggling to hold on to current levels. Moving on to the DAX, and DAX been a rather better performer in relative terms than the FTSE, still hanging near its 50-day moving average, which obviously the FTSE lost ages ago. So we need an end-of-day close above that 50-day line. That's around 15,250. Double top with yesterday's high as well. So looks as though basically we're in a channel like that, and we need to hold the floor of that channel. That's currently around 14,800, and that will be the decider really in terms of whether we can continue the recovery from back in September, or we roll over perhaps down towards the old support there from December, 13,800, and the 200-day moving average near that level as well. RSI just failed below the 50 level, so that does suggest that while we're below the 50-day line, we have the chance of rolling over a bit lower. On to the Dow, where you could say it was all this market's fault. Horrible price action over recent weeks, especially with that failure at the 50-day moving average, which is hopefully not what the DAX is going to do. There is a glimmer of hope there with the bounce off that extended falling support line there around RSI 30. We have also marginally bear trapped that November support there, so that was around 31,700, so we just bear trapped that and rebounded for yesterday. Want to see basically an end-of-day close above the 200-day moving average around 32,400 to try and snap, or even begin to snap, the rollover that we've had in this market since November. If we do that, then I suppose the 50-day moving average up there at 33,400 would be the first target. If it was less good, then we would just fail at that broken October support line. You could argue that that support line there is actually like that, and we've got a wider trend channel. But probably in the meantime, all about November support and the 200-day moving average. On to Bitcoin, which maybe surprised some people over the turn of the week. Still looking pretty impressive in terms of that bear trap below February support. That was around 21,400. And then the way that we managed to, or we are managing to remain near the post-August resistance at 25,000. The other plus points are the way that we closed the gap down that we had at the beginning of the month. The gap closed buy signal. You could almost buy on the day after that. So that would have given you a notional entry around 24,100. We've already spiked up towards 26,500 yesterday. So looking pretty good here as a potential mid-move consolidation bull flag ahead of a potential move up towards 31 or 32,000 at that broadening June triangle. The other point to note, I suppose, is that we're waiting for the 200-day moving average hidden below that line to start rising, which is actually what it's doing. So that is a plus point already, and that implies with the 50-day line now rising that with the next it's effectively a golden cross. It's equivalent to a golden cross, and that puts this market in a pretty strong technical position. Certainly while we're above the top of that gap, 23,200, looking for the 30,000 area, perhaps as soon as the end of this month, and maybe if you're conservative, allowing for that to happen by the end of next month. The pattern here, though, that I suppose above 30,000, people would regard Bitcoin as being half full rather than half empty, which is the look at the moment. On to the small caps, and starting off with the one which doesn't get much airtime, Altyn. Couldn't resist this because we've got gap close that we've had this week around the £1.20 level. We've got a sharply rising 50-day moving average. Couldn't really rise much faster than that. And at end of day close above late February resistance at 124 could then set us up for a move through 130, which will take us up to retesting January resistance at 160, ideally by the end of next month. Ben's Creek's been in the wars over the recent past. Another glimmer that we might be finding our feet. Broken that line of resistance there from January around 19 pence. Want to see plenty of days above 19 pence to maybe target the 50-day line at 22.5 pence over the next couple of weeks, maybe by the end of next month. We've also got bullish divergence, so we had a bear trap rebound and a bear trap but a higher RSI, so that is a sign of positive momentum coming in. The best case scenario at the moment would be that above 19 we head to the top of that falling trend channel from November as high as 27 pence by the end of next month. If you're cautious, you wait for the RSI to get it back above neutral 50. We haven't been above that particular number since the end of January, so that would be a plus point to add on to the bullish divergence. Been covering Corcel quite a lot. I'm not quite sure why I did it, but obviously with the move higher today, we've been up as much as 50%, I think, at one point. Things are looking quite good. We had that resistance line projection target as high as 12 pence, and ideally we can see that by the end of next month, perhaps the way things are going by the end of this month. And the other point to note is that we would prefer if the shares remained above 7.75 pence, which was December resistance for the share. So above 7.75, looking for 12 pence on Corcel, which is looking rather nice at the moment. Ironically, Conroy Gold doing rather better when it's up for sale than it was doing when it was not up for sale. Here we had the unfilled gap to the upside on Monday, cleared the 50-day moving average, which is now rising. That was a buy signal, or a couple of buy signals in their own right, and the view now is that above the 200-day moving average at 22 pence, we could head as high as 36 pence at the top of that rising trend channel from June last year. The other plus point to note is that we've closed above, or we could close above the top of that gap down that we had back in November. So above 21 pence is an extra buy signal for the shares. But the key here really holding above or breaking above the 200-day line by the end of the day, and holding above that to go to 36 pence by the end of next month. Genedrive has been a remarkably steady ship over the recent past, just after the wobbles that we had in January, February. Probably people trying to get out, thinking that that was a good opportunity to go. But in fact, a break of 40 pence here could take us up to a new target here, which is an early 2022 resistance line projection as high as 62 pence. That could happen by the end of next month if we can get decent closes above that May resistance line and the 40 pence level. So looking pretty good there. The other plus points are obviously the other plus point is the way that we gapped up yesterday, and we've broken the gap high day, and we have also broken, or are breaking, the February resistance. So that is looking like a good situation. Another situation which doesn't get much coverage here, but too good to resist at the moment, is Hyve Group. Here we've had a bull flag breakout, it's sort of sideways consolidation, and then above 105 we're looking for a new target to the upside, perhaps as high as £1.50 by the end of May. The way things are going, it could actually happen a bit sooner, but a great looking setup there. Nice sort of U-shaped turnaround for the stock after multiple bounces off the 200-day moving average. Next up is Quantum Blockchain, which is a stock which I was intending to do yesterday, but managed to come up with Quantum Exponential instead. No offense to Quantum Exponential, obviously. Here we've got the shares gapping through the 50-day moving average at 1.75, and above that we're looking for the top of that rising trend channel, or that June resistance line projection, at 2.5 pence by the end of next month. Upside value while we hold above the 1.6 pence area and the 50-day moving average. Next stock is the one that I covered yesterday evening, which was almost about the time the company had a rather strange offer. Here the shares are up 6%, and the coverage yesterday was on the basis that we are as oversold as we have been since the end of 2021. That time the shares trebled or quadrupled, and we're sort of hoping for the same kind of thing again. The shares have done that kind of thing before as well. The overall range for the shares almost in the sort of the 0.1 to 0.5 area over the last few years, and one would expect the same thing to happen again. Break of that resistance line from September, the first trigger at 0.21, and then after that we're looking for the shares to return to the 200-day moving average, which has been resistant since the end of September. That's around 0.27. But the main thing here is that we have a floor in there at 0.18. Moving on to Seed Innovations, which has also been in the wars over the recent past. You can see various breakdowns on the chart, but nice bullish divergence there and a bear trap rebound from below 2 pence. The longer we stay above 2 pence, the greater the chance of a move to post-October resistance near 3 pence, and we could see that perhaps by the end of next month. Bit of a pie in the face for the bulls on Tremor, despite potential takeover being flagged by the worthies at Sky News. Here we've got a falling trend channel. Shares fill the gap and then have actually come down. We had a gap down last week. We do have a support line projection, probably heading down towards the 225 pence area, which I suppose people wouldn't really appreciate if we had to go down there again. But 225, the floor there, at the floor of the channel, and obviously now we've got that peak from yesterday at 283. That's the level to break really for the shares to snap the bear run that they've been in. Probably the earliest sign at this stage would be another end of day close above the 260 level, as we had yesterday, to confirm that we've got a bear trap from below December support and we could finally head higher. But with the 50 and 200-day moving averages both falling, in fact, it looks like a bit of a tough one for the bulls at the moment, unless we get Goldman serving up a decent takeover. On to Verditek, which has been one of the most difficult charting situations of the recent past. We've had temporary rallies here, falling wedges, and then rallies through the 50-day moving average, and we're hoping for the same thing again. The reason for the excitement and the coverage today is that we had a gap down last week, but we've managed to fill the gap this week, and so this gap closed buy signal. We've also had a bear trap from below the old December support there at 0.55. Above that, looking for as high as 1.2 pence at the top of that broadening triangle from December. Bullish divergence line as well, so it looks as though Verditek can offer a decent upside even from here, even if that then fades away after that, as all the other rallies have done. Finishing off with another stock which has been troublesome, Westminster Group. Here you can see that shares look like they've just delivered a tiny bear trap rebound there. So the low back in November around 1.4 pence. Above 1.4, we're looking for perhaps a little rally towards the 200-day moving average around 1.7 pence, even if the shares fade away again. You can see that the shares have been really oversold, so the RSI below 10. At the last time they were below 10, the shares rallied from a penny to 2.3 pence. That was back in August, September, so maybe history will repeat itself in terms of a rebound from very oversold areas. That's it for me today. More updates tomorrow.